Welcome back to another episode of From the Trenches, where myself and my esteemed colleague and partner, James Boyle, get together and bring you behind the curtain at Plan First Wealth, share with you what we're talking about, what we're doing, what we're seeing, in the hopes that it will better equip you as an expat to thrive in America. So, let's get straight into it. Hi, James. How you doing?
Good. How are you? How are you holding up with this February weather?
Well, I don't enjoy shoveling the drive. I've got a really short drive, and you look at it and you think, how hard can it be? And I tell you, it can be pretty damn hard. And then when it's like 3 times in a month, and was it Monday or Tuesday when my wife was in New York, I had to get up at 6 a.m., get both cars, get it off both cars and shovel the driveway. And yeah, it set me up for the day in one way, but not how I'd like.
February historically is not a great month for me or anyone in the Northeast, I think. But do you have like your salt strategy?
Well, I don't have a strategy.
Okay, because I
had salt and no strategy, and now I have no salt and no strategy.
That's how I operate generally. I just have no clue what's happening at any times with salt. When do I put it down? Do I put it down before? Do I put it down after? It's going to freeze. I just don't understand.
Yeah, and to make matters worse, in January this was the first snowfall we had. My 5-year-old was dicking around at the bottom of the steps, pretending to slip on the ice. And my wife said, I'm at the car watching. My wife said, well, I'm getting stuff out of the boot, but I turned just as it happened. My wife saying, don't do that, you'll slip. What did he do? He slipped. And he landed forehead first on the step. So that was our second ER visit of the year and his first. So
get it in early, and then you're good for 2025, hopefully.
Well, yeah, the other kid, the younger one, the 2-year-old, he's been 3 times. He's just a nut job.
Does he get like frequent flyer at the ER? Or?
No, he gets lollipops and teddies and all sorts.
Punch card or something every 10 visits.
Eventually, he's a complete nut job. He's wonderful. And apparently this is a rite of passage. Apparently the youngest is always a complete nutter. And certainly in our house, that's playing out. So I've been up since, wife's in New York again today. I've been up since 5:30. Both kids, school run, dog run. As I said to you before, I've had a coffee and this is my 3rd cup of tea. So.
Caffeine. Good.
Anyway, let's get into it. So we've actually got a lot to talk about this one, so we're going to try and keep it relatively brief, but it's been a wild time since we last met. So let's start there. What's happened since we last chatted, James?
What hasn't happened, it feels like. Every day is a new headline, new excitement, which I would anticipate continuing for the rest of the year. And potentially
do you remember
longer.
DeepSeek? That happened a decade ago, right?
It feels like ancient. DeepSeek. That was written in the
2 weeks ago
now.
Yeah, right. I mean, at the time, that was like we woke up on a Monday and the market just fell off a cliff because DeepSeek apparently been out for a while, but everyone kind of got wind of what it meant. And for anyone who doesn't know it, the AI industry is spending billions and billions and billions of dollars on AI infrastructure and large language models and all this stuff. And then DeepSeek, this Chinese company, basically put out what I understand is a very workable model for a fraction, like 5% of the cost. And everyone freaked out that all this money was wasted and it could be easily copied and the Chinese are going to take over everything. And the market fell off a cliff in the moment and then steadily recovered for the rest of the week.
Massive cliff, too. It shouldn't be overstated. NVIDIA's drop on that Monday was just a hair under $600 billion, was the largest dollar figure market cap loss of all time for any company. So I think it goes to show how vulnerable these stories can be, right? And that's what they are, right? At this point, I think investors are looking for profitability, or will be, for all the capital spending going on. And if there's any hint that the basis of that story is not true or may turn out to be less than promised, I think we're going to see a lot of volatility as we did.
We're going to talk about this later, so let's not spoil it. But when investing looks too easy, you're usually about to get slapped on the face and found out that, oh no, there's more to this than... We had DeepSeek, and then that was quickly forgotten because we had the first announcement of tariffs. He'd not even been in office a month, and he was threatening Canada and Mexico and China with tariffs.
And just today, so for those listening, we're recording this on the morning of Thursday, February 13th. It was announced that there will be a press conference at 1 p.m. from the White House on tariffs. I don't think they specified
Really?
what it is exactly. As it stands, the president announced global 25% tariffs on steel and aluminum. Those are meant to take effect on March 12th, but then there was some confusion and said it could be implemented as early as today. 25% on Mexico and Canada are set to come next month. 10% on China has already been implemented. So,
But look what happened with Mexico and Canada. It came out all the bluster at the weekend, and then by Monday, Tuesday, Wednesday, conversations have been had, deals have been done. This is just his method of negotiations. Punch him in the face as hard as you can, and then do a deal, and then put your arm around them and pretend you're friends. It's no one's entirely sure what the end objective is here either. I've got to tell you, much more so than the first term, I'm tuning out a little bit. I'm not tuning out. I'm following it because you have to. But the first term, it was an emotional roller coaster for me, just as an observant living in this country. This time, I'm way more detached from it, which is frankly wonderful. I found the first term exhausting.
Yeah,
I found it exhausting.
Yeah. You wonder how many
way more
times you can
detached.
pull this stunt before your bluff is called, essentially. So who can say, right? I don't think anyone can predict what's going to happen over the next week, let alone 30 days. But the concerns economically, if we kind of look from a market perspective, is obviously the potential to contribute to inflation, which did have a hot print yesterday. PPI came in a bit above expectations this morning. So, that's going to be the ongoing discussion.
Yeah, inflation being tamed or not. So yeah, life's too expensive in the US. So
How about eggs, right? That's the headline grabber. Eggs 53% year over year. Do you eat a lot of eggs?
yeah, we do. Yeah, it's just so easy with the kids. A lot of eggy bread.
Yeah.
Do you know what eggy bread is?
Is that when it's in the middle of is that soldiers in a bog or something
It's
like that?
kinda
What's that?
It's like French toast without the cinnamon. You just beat an egg, and then you soak a piece of bread in it, and then you fry the bread. That's eggy bread. You have it with
That
HP
sounds
sauce.
good.
Do you know what HP sauce is?
That's the brown sauce, right?
That's the brown sauce. Yeah.
Oh, that's pretty
Yeah.
good.
It's very
Good
good.
points
No, I
for
wasn't saying very. Yeah, it's good.
What do you call the egg that's like in the bread? Is that soldier in a hole or something? No.
Oh, you mean eggs and soldiers?
Toad in the.
No, not toad in the hole. What do you call it? Soldiers. When you dunk the pizza slices at the strips of toast in.
In an egg holder, you would dump it in the yolk.
Yeah. Wait, we've gone off on a tangent here.
I was going to say,
Not
this
sure
is
what-
borderline
not sure.
unlistenable.
Not sure how this is going to help expats
All
thrive in
on-
America.
All on egg prices, too. Just some
Okay.
headline numbers to bring it back into focus here. Wednesday CPI, right? That's the big one that everyone kind of looks at. Increased 3% over the prior year. It's an uptick from December's 2.9. It's 0.5% month over month. It is the largest since August of 2023, a slight acceleration from December. Is this enough to be concerned about? I think it's going to be an ongoing story, right? The core CPI, which is ex food, no eggs involved, ex gas, increased 0.4% monthly. It's still 3.3% over last year. So it is above the Fed's target. It gives them room. Powell was given testimony this week, gives them room to be patient with rate cuts, right? So that is going to be an evolving story throughout 2025, I think. Are we going to get a cut in 2025? And if so, will it be one? Will it be two? And when will it happen? I think the bond markets right now are pricing in one cut, but not until October. So, we expect to stay at these rates for some time unless something else breaks, which it very well could. Employment's holding up for the moment. Could that change? We'll have to see. But the Fed remains.
Question. It's such a circus. It's such a circus. It's just it's denigrating to America. Honestly, it's embarrassing. The whole Senate approval stuff is embarrassing.
And it's a
Achieves very
fairly
little.
new development, right? It wasn't always that
Is it? I don't
Feds weren't so
Oh,
weren't made to be quite
loquacious.
so vocal.
No.
Yeah.
Greenspan famously never gave anything away. Yeah.
Mm-hmm.
I don't know about
And
the
you
Senate
wonder
hearings.
if that wasn't better in some ways.
I really don't know. Do you just round this part out about market? So it's been a really tumultuous start to the year. It's been a really, really tumultuous few weeks, but then it always is, right? Although it's definitely heightened. I just want to remind people, December 31st, S&P 500 closed at 5,881, according to my stocks app. Today, we're at 6,090. It's been slightly above that. It's gone down. It's come up. You've just got to tune out everything we're talking about. We talk about it because it's interesting, because it's relevant, because it's happening right around us, and because despite our constant entreaties for people to tune out the noise. None of us do. We're all susceptible to it. And yet, real companies managed by real people doing their best, striving, are just going to keep doing what they do. And that's reflected in the market price. So
Absolutely.
Tune out the noise. Keep the faith. And I must say as well, I don't know if you've seen, but Europe's doing okay. Year to date, Europe is up, really up. The economy's not doing great, but the stock market is. And also, I checked the FTSE before as well, and that's also had a good start to the year. It's a cacophony of noise to abandon everything but the US reaches its zenith. That's probably the time to do exactly the opposite.
You're right, and it's easy to get caught up in this fervor when the S&P's up something like 20-odd% year on year for 2 years in a row.
Once you factor in 2022, it's only like 7-8% a year, which is kind of normal.
Yep.
It's amazing how we forget.
People hear 7-8% and think, oh, great, I invest in a broad basket of stocks and I get 7-8% a year and I go on my merry way. What that means in reality is similar to what we've seen over the last couple of years, right? A really painful year followed by a rebound, maybe another good year, maybe we get a correction this year or next. It's part of the toll you pay to invest in equities, capture those
real companies, run by real people, harnessing the immense and unstoppable power of human ingenuity. We've tried to crush human ingenuity. Case in point, Russia, China, in the past, not so distant past. You can't crush it forever. And the US, frankly, has been the best at harnessing it, or the best in recent memory.
Should we talk about concentration in large cap US, since that's in the news?
Well, this was triggered by the fantastic Jason Zweig. He has a newsletter in The Intelligent Investor in the Wall Street Journal, and he's just put out a piece talking about how the Mag 7 are completely dominating the S&P 500. And therefore, a lot of people's portfolios, because a lot of people are invested in the S&P 500, and a lot of people, even those who are diversified, have a big concentration in the S&P 500. And this whole piece is about, is this concentration a problem? And it turns out that just the pure fact that the S&P is so concentrated in itself is not a problem. It's not even historically abnormal. And in fact, during periods where a certain sector or a cluster of companies didn't dominate to such an extent, the stock market in the US historically hasn't performed that well. So no, we shouldn't be afraid of a few very good, very successful companies dominating the S&P. We shouldn't be afraid of that. That is a feature of indexing, not a bug. What is a problem is how expensive those 7 stocks are. And as a result, how expensive the S&P 500 is overall. He's ringing the bell. He's saying, guys, watch out here. We've got a problem.
It's an important nuance there, and I'll just repeat it. The top 10 companies in the S&P 500. So obviously, to the layman, that's the 500 largest cap companies in the U.S. The top 10 of those made up just about 37.5% of the index's total market value. So that's over a third held by the top 10 companies. It is not necessarily that concentration level in isolation that may cause a problem. What is much more important is the potential for overvaluation, right? Too expensive. So the S&P, those Mag 7 companies, which everyone knows the names, right? Alphabet, Amazon, Apple, Meta, Nvidia, they are trading at about 22 times earnings expectations for the next year. That is above the average since the 90s, which I think is something like 16. Now,
let me just jump in a second, James, because I don't think the average person on the street, particularly Brits, think when you hear earnings, I don't think they necessarily understand what we're talking. That's just profit. So stock price is often measured as a function of profit. So if you make it, how many times annual profit is someone willing to pay for this company? It's a really simple concept. And historically, looking at the S&P as a whole, James is saying investors on average, were willing to pay about 16 point something, a multiple of current profits to buy the S&P 500. But right now, because of the concentration in these particular stocks, it's 22 times profits that people are willing to pay. And that is right at the top, historically.
Now, it's not actionable advice, right? Because we don't know. There's that old saying, the market can stay irrational longer than you can stay solvent. So we're not saying to time, and we'll talk about diversification and the importance of diversification. But when we start to field questions from our clients and even people who don't work with us yet about, they look and see the headline numbers, right? And what is shorthand for the U.S.? We're guilty of it here on the podcast, the S&P 500. So when there's 2 years in a row of 20+% returns on the S&P, everyone wants to pile in. Everyone wants to performance chase. They don't realize they're doing it, but they look and see, hey, the S&P has done 50% over the last couple of years. Why aren't I all in that? And that is arguably the precise wrong time to make that decision, right? You want to be in the business of buying low and selling high. What you are doing intrinsically when you see a run like this with one segment of the market is buying high and selling low effectively. So you have to be really conscious of that as an investor, that you're not taking on more risk, that animal spirits, quote unquote, in the market aren't leading you down the path that could overexpose you and lead to losses that you weren't prepared for. I think that's a key distinction when we talk about the S&P as shorthand, and something that it's easy to get wrapped up in a period of frenzy like this.
James, the 7 stocks we're talking about, the people are paying on average right now, was it 44 times or 42 times?
Something. Yep. Mm-hmm.
40 something times profit. Mm-hmm. Now, and that's what's dragging the S&P as a whole up to the 22 times that we mentioned. Is it possible we're on the cusp of an AI revolution that's going to book 100 years of history, and we're entering into a new era? Yeah, I guess it is. Is it more likely, and this is what Jason Zweig is saying, is it more likely, though, that the US has had a magnificent run, but the future might not be so magnificent? If the historical average is, I'm just making this up, the historical average is 10% a year, and we've had 15 years of 15% a year, or whatever it is, we've had some magnificent returns, and that means that in all likelihood, the future will be somewhat muted in comparison to the recent past. And therefore, rather than concentrating in an already highly appreciated asset, people should start to think about diversification if they're not already diversified. They should think about where the puck is going, not where the puck is.
It's easy to say tune out the noise, right? Even though we talk about it, and to some people it's entertaining. I'm sure a lot of our listeners. But having a plan in place, having that diversification in place helps you to do that very thing, right? So if you are overexposed tech, if you're heavy in the Qs and you've made a play on NVIDIA and you're looking at Apple, maybe you are overexposed, and maybe you should consider, are you appropriately diversified for your goals? That key diversification being the tool with which you can ignore the noise. You can tune out the noise.
As well, you've heard concentration gets you rich, diversification keeps you rich.
Mm-hmm.
And I think concentration, what people are really meaning there are traders, people who set up their own company and concentrate in a single stock, or people who work for a company and accumulate stock through that. That's concentration. I think the mistake is when regular people take their retirement money that's earmarked for their future, even if it's not in a retirement account, and get concentrated, because you can really blow up your savings that way. Really blow up your savings.
And unwittingly, right? It can be an innocent oversight. It's easy to get caught up. Like I said, when the headline shorthand of the S&P is doing well, it is human nature's instinct to say, I should be on all of that. And we saw with the DeepSeek thing. Another stat that caught my eye in 2024, NVIDIA alone produced more than 1/5 of the S&P's entire return. So again, to your point, not making predictions, but we know that potentially they're in a vulnerable position. If there is something that derails this AI story, as you're saying, overexposing yourself to that segment of the market could prove dangerous.
Let's look back to 2007, 2008. I know Lehman Brothers did go down, and we recently watched Too Big to Fail. I read the book and we watched the movie again recently. It's a good movie. Takes me back in time to that period of time. But it turns out letting Lehman Brothers go down was a mistake. But that's kind of immaterial, because the rest of the banks cratered. And they cratered for years and years and years. So James and I aren't talking about any of the Mag 7 failing. We're talking about the Mag 7. We're just talking about them not doing unfathomably well for the next 15 years as they have for the last 15. And that is very, very possible.
You could come up with any range of hypothetical situations, right? One of which you could argue, and we've seen some of this in the last, I would argue, 6 to 8 weeks, a rotation out of the heavily dominant stocks, right, tech stocks, into other segments, other companies within the S&P or international or Europe or UK. You may see that maybe the AI story starts to falter and that capital moves to elsewhere. So there is no predicting what's going to outperform this year, 5 years from now, 10 years from now. The best you can do is diversify.
And James, this is a very unfashionable thing to say right now, but if we look at 100 years of research and data, small companies outperform large companies. Now, they haven't for the last 15 years, and you can take that one of two ways. That either means abandon small caps forever and just only invest in large, or maybe there'll be a rotation. Maybe the time of small caps will come back. TBD. What we're saying is don't make a bet. Diversify. That's always. If you want to protect it, grow it, but protect it as well, diversify. If you're just pure out making money and you're willing to lose it all, concentration. Go for it. That's not what we do. That's not what our listeners do. That's not what our clients do. Sometimes the lines get blurred and people get mixed up. But again, that's part of what we're here to. That's a part of what we're here for. So we were going to talk about a couple of situations that have arisen recently. One with a prospective client we've been talking to, and another I received an email. We'll start with the email one, right? Shall we? So I received an email from someone asking for an introduction to a tax advisor who could, in the US, turns out, who could help with a UK property sale. And I said UK property sale there. So someone asked me, I sent them a list of UK US tax advisors that we work with, all of whom are in the UK. Specific UK US experts are the people who can do both tax returns. There's some good cross-border ones in the US, but they're kind of a bit more generic. Whereas if you need to be doing both US and UK tax returns, and you need really specific UK advice, you need someone, the best are in the UK. And this person came back to me and said, "Oh, that's great, thanks, but I'm looking for someone in the US because we're US people now. We're going to pay tax in the US." And I had to go back and say, "Look, I mean, I can, but my understanding of this is your UK property is a UK situs asset. You're going to have to pay tax. You have to do a UK tax return and pay tax in the UK, I believe. Then you'll have to still report it in the US, and there may be more tax to pay, or you'll probably get a credit for it, But I think your foremost obligation is in the UK." And they had no idea. And it just goes to show, I think most people would have no clue about that. And this person was trying to meet their US obligations, not realizing that actually they had UK ones as well. So I just thought that was quite interesting.
We get these kind of questions in that vein a lot, and we hear what you just mentioned, right? This desire to have a tax advisor in the country, in the U.S. essentially. If you're living in the U.S., which like you say is a valid instinct, right? There wouldn't be anything wrong with that necessarily. I think the point we try to get across is making sure, understanding what you need first. In this case, it would be cross-border tax advice, and then understanding which professional or which team has the expertise and knowledge to do that, to enact that. If you have, like you say, UK property, you are going to have obligations in the US, of course, but you're also going to have UK obligations, and you want to make sure that you're spending the effort and time on both of those and not foregoing one for the other.
What we see is like clear cross-border situations. People don't see it. And I think that's one reason why for a huge amount of non-compliance, and I'll say it a million times, the vast majority of expats in the US, those who moved here mid-career and had stuff in their original country, are in non-compliance. Almost
Absolutely.
all with that. And most haven't got a clue. It's unwitting. And because people don't realize, people with cross-border situations don't realize it's cross-border. So there was that. And then we've been meeting with someone recently who's been in the US for a couple of decades, has a financial advisor. Not really. They have someone managing a chunk of their investments. There's nothing else going on there. It's just a pure investment advisor over there doing their thing. And meanwhile, they come to us. This is Brits in the US, and we dig into the situation, and we immediately spot PFICs. If those who don't know, non-US investments, non-US collective investments, ETFs, mutual funds, are looked upon unfavorably, let's say, by the US. And they come with a whole host of reporting requirements and some really punitive tax consequences. And they've been here 2 decades. They've had tax advisors, they've had investment advisors. Within 30 minutes, we're spotting these cross-border problems that are going to cost thousands to resolve, not just in reporting, but in unnecessary taxes and interest that could have been avoided. And the sooner we'd had this conversation, the sooner we could have resolved this, and the less tax and interest they would have paid.
You make a good point there. So it is complex, right? The industry we work in, and it can be overwhelming. And this is going to sound like I'm tooting our horn as the American on the pod. I guess people will expect that from me.
Toot away, my friend.
But
away. We've earned it.
These problems are, to anyone working in the industry with a knowledge of this space, which again is complex, is overwhelming. These problems are immediately self-evident. And you say 30 minutes. I would imagine by the time we opened up this document, it was within 30 seconds, honestly, because these are common problems we see time and time again. The heartache, the penalties, the all of that can be mitigated and resolved by getting to these things early. And if that's not done, then getting the right team in place. Now, obviously, we have a vested interest in knowing that we can do it. Other people can do it, I'm sure, that are out there. It takes an understanding, or working with the professionals with an understanding, to know that these problems exist, because very often people have held these things, PFICs in this case, for decades, when it's a very easily avoidable problem that, like I say, anyone with the knowledge within 30 seconds, 2 minutes, are going to spot those and say, these are a problem, these need to be dealt with. So to anyone feeling overwhelmed or listening and thinking, does this apply to me? Potentially, yes. I would make sure you have your ducks in a row. And if there could be lingering issues, speak with someone, start to address it, because it doesn't help to put it off.
No, it really doesn't. I don't expect domestic professionals, and by this I mean financial, tax, and estate planners, estate attorneys. I don't expect them to become cross-border experts. Although, if they want to, they should check out the Global Financial Planning Institute. There's a great, they can learn a lot there, and they can meet some great fellow cross-border professionals. But what I wish we get the message on is that the moment you get a hint of non-US stuff, accounts, assets, investments, trusts, beneficiaries, properties, businesses, family, anything, stop. Call in the cavalry. But that's not what happens. What happens is they go, yeah, okay, we kind of can't deal with that. I call it a tumbleweed moment. And then it just gets put in a drawer, forgotten about. This is an example when there's going to be a very, very real financial cost. Another example is estate planning attorneys just setting someone up with a living trust. Well, that might be fine. Or for someone with foreign non-US beneficiaries or other stuff, it can be an absolute nightmare. It can result in masses of additional taxes. So I just wish there was a way to, like, it was like in the professional code of conduct, like the moment something non-US pops up, you have to call in a cross-border specialist. So much anguish could be averted and so many dollars could be saved.
Absolutely. And one last point there, just because we're pretty plugged into the industry, right, and are seeking to increase networks, certainly this is a venue to do that. If there are tax preparers out there in the U.S. who have specific cross-border experience, certainly US, UK is something our clients can always use. Don't hesitate to reach out, right? We say that all the time. We want to get this information out there. James at Plan First Wealth, Richard at planfirstwealth.com. Send an email, send a note, and we're happy to have a chat. We are constantly fielding inquiries, questions from this podcast, and we love that. We want to keep hearing those messages.
What's next?
Well, we had a somewhat special edition of the podcast, I would say, last. It was sort of an echo of the old Always an Expat format. And I thought
it was Always an Expat. This podcast has 3 formats. We have this, From the Trenches, where you and I are trying to bring back the curtain, hold back the curtain on Plan First Wealth. We have the other one, the more common one, Ask an Expert, where I'll bring in a fellow cross-border professional, I'll bring in a tax advisor, someone who has some really good technical information to share to help Brits and other expats thrive in America. And then Always an Expat, which is what this podcast originally started at, is when I'll have someone who's got an interesting, important, relevant story to share with the world. And I had Keith Hunt on, and Keith is going through something real. He's battling cancer twice, first pancreatic and now brain. And he's just doing it with, like, courageously, and he's just tackling it with such stoicism and courage. and he's also clearly reflecting, as I imagine is entirely natural, right? Because he's reflecting on his life and his family and what it all is all meant to him. And I saw him on Facebook post something about basically just this is after the pancreatic cancer, but before the brain cancer. He was out walking somewhere and he just said, "People, live your life. You don't know what's around the corner." And that chimed with our message of like, you get one shot at this, one life. Live it deliberately. We're all just going through the motions. We're all guilty of it. So I asked him to come on and share his story, share his message, and I think it's powerful. I think he's powerful. I think it is powerful.
That conversation you had about this idea of one shot at this, right? And or what we call, sometimes you'll hear us use the phrase lifestyle financial planning. It can feel abstract, right? It can feel ambiguous, but that is, I mean, obviously a very unfortunate circumstance, but it is such a reminder of why we lead with that, why we're called Plan First Wealth, and why we think that's core to everything that we do. And these aren't easy questions, right? If we're lucky, a lot of the people we talk to, they're wrapping up a career, a very successful career, 30, 40 years of doing something, and they're now faced with this next phase of having the time, health, and wealth, if you're lucky, to do what they want to do, to organize and structure their life, to really enjoy those years. It's such a key piece that's easy to sleepwalk by, right? And frankly, we have conversations all the time with people who are either forced into that position before they had a chance to think about it or plan for it, or come to the end of that career and think, I don't know what that next phase will look like. I don't know where we want to travel. I don't know where we want to land or be or where home is. So these are big questions, and they should be the bedrock of all the decisions downstream of that, right? Investment management and income planning and tax planning should all be in service of that central lifestyle plan. And I thought last week's episode or the last episode was such a good reminder of that, demonstration of that, and a really good story. And, appreciate Mr. Hunt for joining us and being on the show and sharing.
Yeah. And, the part where he talks about, for all its faults, the American healthcare system, which have kind of been reframed for me after I listened to this fantastic podcast. Peter Attia had his ex-McKinsey colleague on. They did this deep dive on the American healthcare system. And essentially, Americans are prioritizing access and choice, whereas the European, Canadian single-payer systems are prioritizing like free at the point of service or something else. But essentially, it made sense to me. It was like, oh yeah, I can imagine that. Americans, that is the American way. They are prioritizing access and choice, and they're willing to pay for it an awful lot. It turns out it's like $5 trillion a year. But the point is, and I've had other clients say this to me. I had a client whose wife went through breast cancer, but Keith is convinced that if he'd had this in the UK, he wouldn't be here now. The pancreatic cancer, that is. He wouldn't have been diagnosed as quickly. He wouldn't have had as good positive an outcome. And he's not just this is not just his intuition. He's in contact with people in the UK. That must really get you thinking.
One of the early conversations we have with people always entails, where will you end up, right? Where will you be? And for our audience, for the people we work with, that's a big question to ask and answer, right? Because you're globally mobile, you travel, you live different places. To hear him say before landing where they landed and they felt like it was home, that was an open question, right? And it's okay to be adaptable. And then when you do land somewhere that I think he mentioned, him and his wife feeling like this sort of sense of comfort and peace, having landed somewhere that they could see as being home long-term or for the foreseeable.
It's a weird feeling, James. So I'm an expat and an immigrant. I'm a dual citizen. I've got an American business, an American house, American kids, American dog. It's my home. But you just never know. You're never quite sure. My hope is that all of us don't have to go through something that Keith has gone through to have a sense of, permanence and an awakening that he's had. But maybe we do. That's why we're always an expat. We know, even when you're 10 years in another dual citizen and you've got way more life and family here than you have elsewhere, you're still always an expat. And then, but incidentally, if you go home or go back to where you're from, you're an expat there now.
You can never go home, right? That's that all. To tie it into.
It's also exciting, though.
Yeah, there's a way to incorporate that into the plan, right? And that level of flexibility, adaptability, mobility. It is exciting. It keeps things fresh. which is always good.
I love expats. They're the best people. Not just British expats, and not just ones in America. Globally, it's you're bold, you're adventurous, you've taken risks, you've expanded your horizons, you've done stuff. I love them.
Absolutely.
Favorite people. Next up on the podcast, we have my friend Aidan back from Collier Bristow, and he's updating us on. So Aidan and I did one of our most listened to podcasts. It's all about,
we got a lot of engagement out of that one.
The domicile system in the UK and cross-border UK-US estate planning, and the Labour government upended it, changed 250 years of domicile rules. So we've got Aidan back on to talk us through those changes and what they mean. Spoiler alert, it means, I think it's mostly good news. It means more, I think it's more options, and I think, it's a while since I recorded it, but I think like more clearly defined outcomes. Under the old system, it was a very grey area, and no one likes grey areas. We know that. This is a bit more definitive now.
Good.
So I think positive stuff, but this is a really good one. This is a great one for Brits in America.
I bet that will generate again a lot of interest and questions, which is always good. How that can illuminate.
He's great. He's super charismatic and good to talk to. So
excellent. I have an eye on the time here, but we'd be remiss not to end on pick and mix, because as we know, that's our listeners' favorite section here. Are you still working through Power Broker?
No, right. So I finished Power Broker. It's got to be in top 10, probably top 5 books I've ever read. It's a masterpiece of investigative journalism. It was spectacular, and I finished it. And after I'd read that, I just wanted to read something a bit easier. And I read. Did I say I read the Erik Larson Lusitania one?
Oh no,
Did I tell you that one? I read.
Yeah.
So I read that. That was good. But once you've gone from, it's really good. But once you've gone from that masterpiece, it was. And then I read. Have you heard of the Ken Follett? You heard of Ken Follett? He does historical fiction. He's done World War II series.
I think you recommended me the World War II one, which is the one I read. I think. What was that one called?
Well, that's a series of 3.
Okay.
That's a series of 3. I can't remember what they're called, but there's a series of 3, so you should read all 3.
Yeah.
But then he has this Kingsbridge series, which is Pillars of the Earth. One is set in medieval times. Anyway, I just read the 3rd in that series. It's in a make-believe village called Kingsbridge. It's set during Elizabeth I's reign, so it's all about the Catholic versus Protestant shenanigans. Should we go?
He is a prolific writer too, because not only does he have these multiple series, but they're. I mean, I know you just off of Power Broker, which was a doorstopper, but these are not insubstantial books, right? They're fairly lengthy.
It's a really easy to read story. Just a human interest story. But I just enjoy historical fiction for. I'm aware of Elizabeth I's reign. I know about the tug of war between Catholics and Protestants. I know about the Bloody Mary burning everyone, and then what happened under Elizabeth. But when he creates a story and you see it from ground level and through the eyes of the humans and the participants, it gives it a whole other perspective. And I really enjoy that. I enjoy both. I enjoy biographies for period when you really get into the history of the thing, and I enjoy historical fiction, which brings a different dynamic of it up to life. But I've also got to tell you one more thing.
Yeah.
I've just listened to this. Do you remember when we were in New York and I recommended the History Hit podcast, but I talked specifically about American History Hit. Right, I've just listened to it. They're doing a series on Jamestown. I know very little about Jamestown, and I've just listened to it this morning, and I did not know this. So you know how there's Plymouth, the Massachusetts Bay colony, and then there was Jamestown. These 2 colonies were they're now there's some rivalry between them, but that's a product of the American Civil War. These were 2 friendly colonies at the same sort of time. And indeed, colonists went between the 2 at the time. But obviously, New England has turned out incredibly different to Virginia. And essentially, Virginia, what happened in Virginia, the antebellum South, that's all a product of Virginia. And it turns out that really, and look, I'm sure I'm not doing justice to this, because I've just learned it, and even the guy who was talking about it said that this is incredibly complex. But it turns out that really the antebellum South was a product of the English Civil War. So Jamestown became the aristocratic centre, and then everyone spread out away from that. And there was the rural-urban tension that we have today. a lot of British royalist refugees had come over. The Lee family, the Carter family, which I assume is that when he says Carter family, is that President Carter's family? I don't know. But the Washington family, these families were refugees from the British Civil War, and to the point where the University of Virginia are called the Cavaliers. It's after the British Cavaliers, the Royalist Cavaliers. It's called the state is Old Dominion, and apparently that's because Charles II said, "You guys are loyal," and it became Old Dominion. There was this tension between the rural Virginia and the kind of the growing aristocratic centre in Jamestown. There was this a rebellion, and they were looking at the English Civil War, thinking, if you can rise up and behead a king, then why can't we rise up and behead a governor? Then there was this Bacon Rebellion after a human being, not after breakfast
food stuff.
But the aristocrats won. And then there's a whole chain of events, but essentially this led. It's the opposite of what happened in the English Civil War. The aristocrats won, and the antebellum South was born, and then you have this wildly different outcome from the Puritans up in New England, and the aristocrats planting their tobacco and cotton in the antebellum South. Absolutely fascinating. When these pieces of the jigsaw come together, I absolutely love it. Because you never think, I never thought, it's so obvious that the South and the North are different. And if you had sat down and thought about it, I'm sure you'd realise that there's an explanation for it, but I'd never thought about it.
Mm-hmm.
And I found it
ripples, arguably to this day, right? I mean, that
absolutely
will be forevermore. Yeah, I always find music, that kind of music heritage, fascinating too. And I am nowhere near a scholar on this, but you always hear about Appalachian sort of, you call it like American folk music, is descended from, I think, in parts England and Scotland and Ireland, even down to instruments like the fiddle and the banjo. And when you know those connections, you can then hear it and how it's been preserved and things like that. It's fascinating to think about, those through lines that otherwise wouldn't be obvious, but afterwards you look back and think, oh yeah, that makes sense.
Do you know? I know, because I always go on about books and podcasts. I'll give one TV recommendation as well: The Day of the Jackal.
I've heard this is
fantastic.
Good. What's that streaming on? Is it?
Great question. Not sure. Hulu maybe? Or
Okay. It's like a spy thriller.
Eddie Redmayne.
Yep.
It's a remake of a 70s movie, which I think itself is a remake of a Frederick Forsyth book. And Eddie Redmayne is fantastic in it. It's just top quality TV.
Nice. I think my last pick in Pick and Mix here, and we'll wrap up here, I promise, was Slow Horses, which we ripped through. Absolutely loved it. Waiting desperately for, I guess it'll be season 5 now is coming up next. A couple book series. So I have been stuck in this time of year. We talked about the weather. We talked about being gray and cold and dreary every day. I find that this time of year I get stuck into series. I'm not a usual, I don't know if you'd call it a thriller mystery type novel guy, but I have been devouring this series called the Dublin Murder Squad series by a writer called Donna French. They're all set in Dublin. She does a really fascinating structural technique where it's a 6-book series. I think I've read about 3 or 4. I have never seen this done before. She'll take a ancillary character from one book and make them the main character in the next. So it's not quite one-to-one a continuing story, but you start to see little overlaps and connections between characters you hadn't noticed before. So really excellent, especially I'm sure if you're into that genre, they're really good books here. She's another one that's really prolific. I started to look at her bibliography, and she's got, outside of this series, another like 10 books or something. So if you're looking for some, I wouldn't say lighthearted escapism, considering it's called the Murder Squad series, but it's very entertaining.
Righty ho, thank you, mate.
Thank you all for listening. We always say it, but send in questions. We're getting more and more, and we can always work them into the topics of the day, as it were. We want to make sure that this is relevant and helpful for everyone listening. Maybe the next time we get together, it will be a little bit warmer and sunnier out.
Fingers crossed.
Fingers crossed. Take care, all.
All right, bye. Cheers.